sorry about this. Okay, I forgot to turn on the mic again. Thank you, Andrew, for letting me know. Okay, so let me introduce again. Okay, welcome to Round and Search Market Outlook. I'm Kelvin here from Round and Search. So if you're watching this from YouTube channel and then or from Facebook page, remember to subscribe to our channel and also like this video, this live stream, or share it out to more people so that they know what to do next for the current market, okay, for the upcoming market here. And maybe let me have a brief introduction about our channel over here and our live stream. So about Round and Search. So what we do here is that we are not just you can see we do some live stream in day trades, okay, and then we do into US market vlog, how I find the right way. Still no sound. Yeah, it should have sound after that, okay. Yeah, so after they watch it, then they should know. Okay, so sorry about that. So it's always a bit cupboard when I start the thing. If let's say you can find the sound, then please give me a thumbs up or maybe share it out in the comment. Okay, so Round and Search, we look into operator analysis. We are not just we are not just looking into intraday trades. Thank you. I have sound right now. We are not just looking into intraday trades, okay, or we are not just doing contra trade. We are not just doing swing trade. So the method we look into it is analyze the market, okay. It's always following the market, because as a trader or maybe investor, we need to understand how the market works. Of course, you are joining this session is because I'm going to share out like what is going to happen later on, okay. The market trend, like what I've shared a few weeks ago, where I share with you guys, I'm telling you guys that the market is going into a retrace. Of course, I do get a lot of people like saying, all right, supporting that the market is going to move up higher and things like that, but it doesn't matter. I have my own analysis, others have their own analysis as well, but in fact the markets actually went into a retrace. And with the trading method that we use, whether it's intraday trade or midterm trade or maybe it's a contra trade or short-term trade, it depends on the market. So market goes ups and down, so basically we need to know what kind of trading method we need to apply into the right market trend. So like for example, in the past few weeks, when the market is going into retrace, before it goes into retrace, we do a lot of intraday trades, and then there's a lot of opportunity there. When the market is going into a retrace, there's not much of opportunity, but of course there are opportunity for those look into the stocks that they have the price rebound, okay, or they have the demand that is coming in, showing it in the all the trading data that we can have available in the market free, okay. So that's what I'm going to share with you guys today about the whole market. So last week market is going to retrace. So market seems very bad for a lot of people, because most of the investors in the market, they only look into one thing, where they just buy at the resistance breakout or maybe the indicator cross up. So when the market is bad, resistance breakout, and then breakout fail and then start to go down lower. So a lot of retail investors are suffering losses in the market. So that's why we need to know all these things ahead of a lot of people, okay. So we can't just look into the data shows. Like for example, let me show you, like in this data, it shows like at the top part here, KLSE is actually going down 0.5%, which is 0.5%, and majority of the shares are in a losing trade. 500 over stocks are losing, and only 300 over is gaining. A lot of people, when they see this, they will start to think like, oh, okay, it's a bad market, which is not. All right, so we can still see there's a lot of stocks are moving upwards, and you can look back into some of our live stream for intraday trade. We are still able to make profit from it, even though in a retrace market. The question is always what kind of trading methods you should use in what kind of market trend, okay. So right now you can't look into this surface, this data over here. We need to look deeper into it. So that's why I don't use traditional technical analysis where you have to plot the resistance or follow the indicators. So all this I've used it before, it's not working, it's not effective. I believe most of you actually use it before or using it right now, so it's not effective. Okay, so what I find right now in the market is the retrace trend is going into an end, where I find a lot of volumes coming in at the lower price. Let's take, for example, some of the stocks here in the top active list. If let's say any one of you are looking into top active list to select stocks to enter into a market, then you have to be careful of it, because sometimes those stocks that appeared in the top active list is for the sake of showing us, okay? It's something that the big boys want us to look into it on purpose, because that is the easiest way to attract the buyers to come in. Okay, so last week wise, when the market is retraced, basically last week it started to show some half of last week, maybe around like Wednesday, starting from Wednesday, then we start to see a lot of stocks when it goes down, and then there's actually high volume actually comes in. Like for example, in this case, after the price actually goes down lower, and then there's a high volume actually comes in. So this actually tells us, with this high volume, how come the price is not going down lower? So when we look into the stock market, we can't just look into, oh, resistance breakout, then we enter. Oh, indicators, golden cross, then we enter. No, we need to question. We need to have everything that it makes sense. So that is my principle to look into the market. That is also our operator analysis principle. Okay, everything, every price movement, it must be make sense to every one of us. Okay, like the price is down, like you can see from here. Previously, the volume here, the price down, they have this much of volume that is going down, and then the price actually goes down quite a lot here. How come I can draw here? Okay. Oh, it's here. It's not done yet. So yeah, sorry. So the price actually goes down from 61 cents down to about like 60 cents. So 1 cent of price down. This penny stock, 1 cent is actually considered quite a lot of big, quite a huge fluctuation here. But with almost the same volume here, how come the price just move down half cent? So what does it mean? So usually, if you look into those traditional technical analysis, any courses or any of the speakers that they share with you, long candlestick, high volume is or down candlestick with high volume is telling us that this is a selling pressure. But yes, it can be a selling pressure, but how come the high volume here, the price doesn't go down lower? So this actually tells us that there are some demand actually going in to support the price, not to let the price go down further. So this actually tells us that, okay, this price is going to have a rebound soon, but it will not rebound immediately the next day. But if you know how, if you know how to use the trading method of doing an intraday trade here, or doing the intraday trade here, so you can actually grab this opportunity of price up. Okay, so this stocks wise, I didn't actually look into it that they have the rebound, but today wise, I look into this. Everything that I share here, okay, is only for educational purpose. So you guys should actually look into this as a learning. Okay, so, and also it's not an offer to buy or sell. Even though I share it here, it's actually basically too late for you to look into it right now. All right. So yeah, let's come back to this. This stocks over here, when the price is going down yesterday from 14, the last trading day, 14 to 15 of April. So let me do a separator here. So the blue line left side is 14, right side is actually 15. So what I see from here, that I would know that today the price will have a price rebound. Not to say like there's a lot of rebound, but the price will have a slight price up during the day. The price will have a small price up. It is not saying that the price will have a rebound like a lot. Okay, so my method is, look, I see this, I know that the big boys, they have the demands that is coming in, so I know that there is a short-term opportunity, there is an intraday opportunity over here. How do I see that? Very simple. you can see when the price is going down, when it's at this range over here, we can start to see the volume is actually building up. So same thing that I shared just now. If let's say high volume, but the price not going down lower, so basically there are some support actually going in, or maybe the big boys that have no intention to throw anywhere lower. Okay, so this actually tells us that basically the price, there are demand actually comes in. But one thing you need to take note is that demand comes in doesn't mean that the price will actually rebound immediately. Okay, the price will not like move up immediately. Okay, so we need to watch it again. So the next day, if the price goes down lower and then it does not move up higher, and then throughout the whole day you have the same thing again, high volume, price is actually basically stopped around at this area, around this price. So this tells us again, like a double confirmation, some demand actually coming into this stock. So most likely this stock is going to have a pause in price. So the next trading day that it comes, it might tell us that the price will have a rebound during that day itself. So you can see here. Okay, so this is 15. So here is today. So like I said, the rebound is something like this. The price just move up during the intraday. Okay, so it's not like a rebound where the price will just push up higher. No. Okay, so it's not that case. So what I see from here is that if you know how to do the day trades over here, when the price is down, then I saw that there's an opportunity over here. So this is, I think, about 8382. 82 is the point that, wait, is it 82? 82 or 83? So 83. Okay, 83 is the point where we start to look into it, because in the morning I saw that, okay, the volume that's actually coming, the price actually bounced back up higher. So when it bounced back up higher, so there's a volume actually comes in to buy at a higher point. When the price is going down, there's not much of volume. So basically the price down is not that much. And I know that because the past 2 days, there's a volume actually coming in. So it tells us that, okay, this price is going to have an intraday rebound. So that's where I'm able to actually get out at 285. So there's about like 2 ticks of profit from here. So you can't expect too much of profit in a retrace market or in a rebound market, because or at the bottom, the starting of the rebound market. I know a lot of people in the market, they always look for like huge profit, 100% or maybe 200%. Of course, every one of us, you want that, but you can't expect that every day. And it's only like once in a while you have that kind of not to say once in a while, you need to meet the right market in order for you to achieve that kind of return in the market. So right now the market is basically retraced and then at the bottom here, so you can't expect this much of return from the market. Okay, so that's why I say you need to apply the right trading method into the right market. So when the market start to rebound up, start to move up higher, and then that is the point where we can get more profit, not just 2 ticks of profit or 2 cents of profit. We can probably get more profit, maybe 5 cents of profit. Okay, and then when it's going into bull run, everything is normal again, then we can not just bull run. Okay, bull run is like overall market is actually bull run. The market back to normal. Back to normal means that some big boys, they are doing their start to do their operation again, push up the price up higher, and then some are distributing, some are doing short-term price movement, okay, or marking up the price in short term. So those are the time that we can actually look for some of the stock that might actually fly up maybe 100% or maybe 50%. Okay, so different market give us different profit opportunity. So just whether you have that knowledge to apply this into a market or not. Okay, can you do intraday trade? Can you do short-term trade? Can you do swing trade? Okay, so all this, there's no best. Okay, there's no best way to do, or you can't say intraday trade is the best. You can't say swing trade is the best. You can't say short-term trading is the best. You can't say long-term investment is the best. All these are just method. So we need to apply it in the right market. So right now, what I see from here is that majority of the stocks are showing this kind of sign where the demands are coming in. So we need to prepare for this. Okay, so right now things are starting to form a bottom. So this is when you need to look into it. Of course, a lot of retail investors in the market, you might actually feel afraid or feel fear to move in this kind of stocks, because most retail investors in the market, they always want confirmation. They want to wait for the very 100%. You don't even get 100% of confirmation, or maybe a confirmation that gives you a comfortable level to enter into market. So that is why always retail investors are always late into the market, because they wait too much of confirmation. They wait for the news, or everyone is talking about it, the market is good, how much they make from the market, and then that's where they start to jump into it, because everyone is already making profit, and then jump in at this point. So basically you are buying at the high side. Okay, so that is the thing. Okay, that the reason why a lot of retail investors always trap at the high side. Whenever they buy, then the price goes down. That is the reason. And of course, if you use resistance breakout, sometimes the big boys will actually use the, not to say sometimes, but quite a lot of time, that the resistance breakout attract the buyers to go in so that they can sell at the high side. Okay, so these are the reason there. So this is just an intraday trade. Let me show you some of it that I look into it for slightly longer time. Okay, so this is one of it, which the best entry is actually on 14th of April. So right now, if you look into it, it's basically too late. So you can see from here 44 cents, and then right now it's 47 cents. So you can hold, okay, because at this point over here, it shows us that things are going to rebound. So just now the stocks that I show you is like 2 days ago, it's showing to have a rebound, but a lot of penny stock right now, they are going into a price up. Okay, so they are going into a price up. So you need to watch carefully. If let's say those stocks that is moving up right now for penny stocks, then you might want to wait for it to have a bit of retrace first before you look into it. But a lot of like ringgit and above stocks are still forming the bottom. So that is the point that you if those ringgit stock are some stocks that you are looking into it for long-term investment, if you see any of those volume actually comes in, you might be able to consider a bit of add on a bit more. Okay, so again, let me clarify, I don't look into fundamental. Okay, I shared yesterday in the how to gain back your trading confidence in the stock market. I said before, fundamental wise, if you look into the reports, okay, the reports are usually last quarter or maybe 2 quarters away. Annual report is basically last year. So we see a lot in the market. Okay, there are some companies, suddenly the auditor says that there's a hole in their financial, some funds are missing, or maybe suddenly there's a union, okay, saying that they mistreat their employees, and then you can see the stock price suddenly just plunge down. So all these are not shown in the report, or you can calculate the intrinsic value of it. Okay, so that's why you have to be that's why I prefer to look into the demand, because the pricing mechanism, basically everything, the pricing mechanism is always about the demand and supply. Okay, the fundamental of it, I find, my own personal opinion is that it doesn't really have if you are saying that fundamental, whether it's a good business, it will affect the stock price to move up higher, I would not say that it's directly affecting the price. It's more like indirect. Okay, it's still up to the expectation of the big boss, institutional investor, or whoever it is. Okay, so you can look into the financial world right now, where majority of those tech stocks, they are not making profit. Okay, but they are still getting a lot of valuation. Why? Because you can't use the Coca-Cola is still Coca-Cola. Okay, how you want to increase the value? You can't increase the value of it. Okay, of this asset price of it. Okay, so they have a lot of funds. People are keep on printing out money. So much funds in the market. So they can't just put everything into Coca-Cola. Okay, so they need to come out something to actually invest into it. So they invest into expectation instead, invest into innovation instead. Okay, so that's why the valuation is like keep on moving up higher and higher and higher. So it's crazy, but this is the financial world. Okay, so every one of them, they are just based on the expectation. So I did share this before. I think some of my students or my members are asking me, so do I see that that is a bubble coming in the market? So it has been going through this for a very long time based on the expectation. So as long as the authorities, they are doing this carefully, then it's fine. Okay, but what is going, everything when it's crazy, when it up to a certain point, if let's say it's out of control, it's just like 2008 time, the financial crisis. Basically the authorities, every one of them, they see this coming, but just that some of them, because of greed, they are not going to stop that. Okay, or sometimes it's too big to fail, so they have to do the show. Okay, the show must go on until the point that they it's out of, they can't do anything of it. Okay, so that's why when is it, so that's why I prefer to go in for a short term. So whenever things is suddenly appear, then I'm really out from the market. Okay, so yeah, come back to this. Other than this, also we do see a lot of stocks are moving up, and so those are the stocks that are moving up. They already move up high, so there's no point for me to share it out. Already missed the best entry of it. So let's see right now in those stocks that in the top active list. Okay, usually I like to if let's say selecting stocks, I prefer to select stocks that if let's say you're selecting it from the top active list, I prefer it to select in the top active that is going down. Okay, so these are the point that where I start to find any of the stocks that they are showing sign that the demand actually going in. Okay, so let's take a look into this. Look in the 5-minute charts. Look at this. What I've shared with you before, volume comes in, price don't really goes down lower. Actually, the demand actually comes in, comes into these stocks. Look into this 5-minute charts over here. What do you see? Okay, you can leave your you can tell me in the comment section. What do you see from here? Price is down, sideways throughout the whole day. Okay, and the volume. So it doesn't actually means that it will have the rebound bounce up immediately. Sometimes this demand actually comes in is because it might be the substantial shareholder or maybe the directors who are buying back because they find that it's cheap right now, so that they buy back at the lower point. So it doesn't mean that it will have a huge rebound, but probably the intraday rebound for the next day there might be. Okay, so these are the things that we can look into it. And then let's check a few days back. We can see from here, this is 18. So same thing happened again, high volume, down, but it stayed at the same point. So which means that 2 days are showing this kind of price movement in these stocks. So high chances that this stock is going to have a small rebound the next trading day. Okay, small rebound for the next trading day. So the small rebound might not be higher than the previous trading day price, but it will have a little bit of rebound there. Okay, so if you know how to do intraday trade, then it's good for you to look into it. If let's say you do not know how, then try to avoid it. Okay, for example, this one has already moved. Let's say I share this to you like maybe on 13th of April. We look into the 5-minute charts, see whether we have the same thing here. Let's start from 12th April until 14. 13 here. So we do see that price is down, high volume, and this one during the market close, there's a high volume here. So some of you might ask, why is there a high volume when the market is closing, where after the matching time? So you do see this kind of stocks, this kind of price transaction quite often. in some of the big cap stocks. The reason usually this actually happen is when the fund, okay, some of the fund houses like big boys, those institutional funds, they are transferring the shares. Okay, it's not like transferring the share, they are restructuring, probably they are restructuring their fund, their investment. So at that time there, they do the cross the trades. Okay, so they have tell that, okay, the buyers, okay, so right now I'm gonna cross this much at the matching time, so you just park your shares there, okay, your buy orders there, so that they can actually cross it to them, so they can buy this much of shares. Okay, so at that time, because at that time retail investor would not, I won't say not able, but do not know how to enter into trades like that. Okay, so that's why they do it at that matching time. Okay, you see this if let's say you look into the market more, right? So the next day the price rebound, but when it goes down lower, same thing, there's high volume, price stay about the same point over here, and that's where the next day, this is the price rebound that I mentioned. The next day, the price will have this kind of rebound up. Okay, so from here you can just take like maybe a few ticks over here. Usually if I do the look into the intraday trades, I'll just look at the 1 minute charts for this. Okay, so right now it's just 5 minute charts. So up until a certain point where we find that the price up with the divergence of the volume, so that's where we can start to exit. So that is the very basic of take profit or the exit, looking at the reacting to the price and volume. If you want to know more of the more precise size of the exit, then you have to look into the transaction data. Okay, we have our training course there, so we're gonna guide you how to use the operator analysis to watch the market and then understand it. Okay, how understand the big boys intention. So from there you can apply short-term trade, intraday trade, mid-term swing, all in the 6-month course. Okay, so if you want to know more, you can PM us in Facebook or maybe drop us a WhatsApp. Okay, so we will share you more about our details. Okay, our training course details. So it's not the usual courses that you will learn from, you know, from the technical analysis, learning the same thing, learn the indicators, how they apply the strategies and like that. I don't like indicators is because it's too slow. The price is just too slow. Okay, so SCN Wolf is actually going downwards, but usually these kind of stocks are they're moving upwards. I don't really like to look for it for a rebound, but will there be you know, opportunity for us to ride along up? Is that I will be very careful with these stocks, is because the price movement is always like I'm just saying like what from the price is like. Every time one price up, then the price will goes down slowly. Okay, one price up, then the price just move down slowly. One price up, and there's a retrace. So it's very hard for you to make any contra opportunity over here, because every time when the price push up and then they start to throw a bit down, one price push up to throw a bit down. So this is a bit like attracting buyers. Okay, so I will try to avoid this kind of stuff, because the important thing about investing or trading, okay, is not how much profit that you can make or how many times that you can make profit or total profit that you can make. Okay, the equation, the formula of making profit, the consistent profit, is profit that you make plus the number of cut loss that you have. So but a lot of people in the market is always looking at the profit. They always think that, okay, the more profit I make, then the cut loss, I can just forget it. No, okay, we can't avoid that. The truth in the market is that there's no 100% of probability. So we need to expect that cut loss. And the profit, if let's say you can maintain and then reduce the amount of cut loss that you make in the stock market, that actually can help you to achieve consistent profit. Okay, like I've shared yesterday, if you have a cup, the cup has a hole. If you keep on fill the water in, basically you can't fill up the cup, right? So you need to actually cover the bottom, the hole there, so that the water can actually fill up the cup. All right, so that is more important. But I don't know, a lot of people don't like to look into that. One of the thing is because we are so it's because of our psychology, that our emotional, okay, we always want to make more profit to cover that, because we are so aggressive, especially for traders or beginners in the market. So this is what I learned throughout my 13 or 14 years of trading experience. Analysis is one thing, strategy is one thing, trading method is one thing. Of course, all these plays important role in that, but up until the end of the day is the experience of learning myself, okay, understanding myself. What am I? Okay, how do I actually not being so aggressive? How do I not to fear of losing money? Okay, how do I reduce that kind of fear? How do I reduce the cut loss? How do I not make more mistakes in the market? So after throughout so many years of trading, I find that there's a way to practical way to actually reduce that. So the most easiest way is risk management, which also a lot of people don't like to look into it, because they find that what is risk management? Okay, as long as I make profit, then I can make a lot of money from market. No, that is wrong. Okay, so we need to know how to cut loss. We need to how to limit that. We need to how to limit the position that we enter into it, so that our self, our inner self, can take that kind of losses. If you can't take that kind of losses, like let's say each trades that you enter, 1 cent down, and then it's too huge, the losses, that makes you feel that you don't want to cut loss. You can't cut loss. If you cut loss, you lose hope in that. Basically, it's all gone. Okay, so you would not have you will start to hold on to the losses, and then at the same time you are very aggressive and then try to make more profit to cover that losses. Okay, so that is not the right way. So we need to cover the whole. We need to limit the number of losses that we make. Okay, so overall market, this is what we see here. You can see most of the stock, even from the top active list, there's a lot of stocks are moving up. But of course, some of it is attracting buyers. Some of it, they might have intraday trade opportunities. So, but of course, there will be some stocks also. I do see a few stocks that have the opportunity, but I can't share it out in the public. Okay, I can share it out to my clients. But this basically overall market, you can carefully look into some of the stocks that they are starting to have a rebound. Okay, so I would say short-term trading for contra trading is the next trading method that you can apply into it. Okay, but you still need to select it carefully. Don't enter because you fear of missing out. So watch it carefully. So if you want to know more about how to trade in the stock market, how to analyze this kind of big boys intention, then you have to look into our training course, because our training course, the operator analysis, so that is how we can actually achieve an average return. Even though in the bad market we are able to outperform the market, of 5 years we are able to achieve like 30% every year. Okay, even though the bad years in 2017 and then 2021, okay, 2021 we are able to achieve like 30% or so. Most people also lose money from it. Okay, so that's is how you have to look into the market. I mean, you have tried to look into technical analysis, traditional technical analysis, all this resistance line, support line, indicators. Okay, so every one of us, we know that. Okay, it's the same thing where everyone is reading the same textbook and then going into the same exam hall and then losing the same money. Okay, so why not try a new thing? Okay, to understand more about it. Okay, so our next class will be coming on May. So after May, there will be a 6-month course. So find out more about it. Okay, I'll share this link into the comment section, so you can find out more about our training course. So it's definitely worth to look into it, because this is what I use to look into the market. You can find that how I can precisely look into there is a retrace is coming, and then when is the market is going to have a rebound, how I do intraday trade with understanding all this big boys intention. So you can do this as well. Okay, so I'm going to share my knowledge to every one of you. Okay, So that's it for my sharing here today. So thank you very much for watching. I'll see you guys again in the next session of Market Outlook if there are any changes in the market. So see you next time.